Hi, welcome. Come on in. My name is Ellen. I am a member of the marketing team here at My Expat Taxes. Come on in and join us. Maybe let us know where you're joining us from in the chat. Feel free to say hi or where you moved from if you lived in the US. In the meantime, we're going to wait for kind of a couple minutes, just give everybody a chance to join. And then if you want, we also have some polls for you. You can answer while we wait. Just some basic questions for us about your filing, what you've done in the past, so that we know kind of where you're coming from. Perfect. Welcome. Some folks from the UK and Canada, Germany, France. Awesome. Welcome. I see a question asking where the poll is. The poll is actually on the bottom right. You'll see a few different tabs you can click. So there's a polls tab. You'll also see a questions tab. This is the best place as Natalie is sharing her presentation. This is the best place if you have a question to type your question so that we see it and she can answer your question at the end. You can also upvote questions. So again, then Natalie will know which questions are the most in demand, and we can make sure to try and start with those first. So welcome, come on in. Well, we are excited to have you here. Some folks from Austria, like ourselves, Spain, Brazil. Awesome, welcome. I'll just give everybody another minute or two to join us. Perfect, welcome. Like I said, if you do have a question, you can write your question and be sure to see what other questions people have, and you can upvote those questions too. Great. Perfect. For those who weren't here, my name is Ellen. I am on the team here at My Expat Taxes and excited to have you join us for our webinar. Perfect. I think we are probably good to get started. So I will let Natalie introduce herself.
Hi, everyone. So I'm Natalie. You might know me, you might not know me, but I am the CEO and co-founder of My Expat Taxes. So I am from California myself. I just saw the first question pop up about California. I know it's a very sticky kind of state tax place to be, but I'm from California, now based in Vienna, Austria. And essentially, if you don't know why I'm here, I mean, it's because I was in your situation. I moved in 2015 and I was really shocked at the fact that I still had to file my US taxes. It just kept getting more and more complicated. And when I was shopping around for, what options I could do, whether I would be filing online or if I could use a tax firm to do my taxes for me, they all just kind of came up short. Either the online solutions were just not for expats, right? They had no clue what it meant to live abroad or why you would even live abroad. And if I looked at a firm that specialized in expat taxes, they wanted to charge me like $2,000 to file my taxes, which was kind of crazy. So that's why I created My Expat Taxes. And, I'm proud to say we're now the leading US expat tax software because we're really focused on making your tax situation easy and making the filing experience a lot easier. So with that being said, let's jump into today's agenda. I think this is a very loaded kind of topic, right? Self-employed, small business, what does that really mean? I know I won't get to everything because it's a Pandora's box, honestly. But I'll try to go through the most kind of intro basic information and then we kind of go from there. So we'll talk about being self-employed and being a small business owner abroad. What are the different company types? What is self-employment tax, which I think is kind of on everyone's radar, right? Because that's a pretty hefty tax. And then what happens? Why do you need to file this kind of dreaded form? Everyone calls Form 5471, the foreign corporation form, right? What that really means. And then just breaking down again, what kind of self-employed person are you? Because there's a lot of ways to be self-employed. And then, of course, little basics, just so we're all on the same page of, when do you need to file? How do you file? If you haven't filed, how do you catch up without penalties? So yeah, let's jump into it. All right, different company types. So this is a screenshot of My Expat Taxes. This is kind of the questions we asked you going in because again, there's so many different ways to be self-employed and it's a loaded topic, right? It's really depends. So you can be a freelancer, right? So you can be someone who maybe it's your side job, right? You have a full-time salaried role, and on the side, you run a blog or you do photography or you do something, using your own name as your own business, right? It's really just you. There's no kind of company structure on it. You're a freelancer. Maybe you do this full time, right? And you just freelance as yourself, providing consulting or English teaching, etc. So that is a freelancer. That's kind of the first level. You yourself, you're performing a job representing yourself and really kind of consulting or doing jobs for other people. Now, there's something next to being a freelancer, which is if you technically freelance for only one company. So say that you're self-employed, but you really basically only work for one company and this company is essentially your employer. You might fall more into the common law employee, but I will get into that. But essentially, first level, freelancer. You do something under your own name, your own address. You have no company really structured up underneath. Now we have the next level under that, where maybe you do have a company, maybe you have, some company, you have a website domain, et cetera, but there's no limited liability, right? So it's not its own structure. It's really just that you yourself, you've created a company name, but you still represent yourself. And, you and yourself is the same, right? You are the same as your business entity. There's no real separation. Now, the next level we get from that is when you incorporate an entity, right? This is when you get a little bit more serious where you say, I need to have limited liability. So in this example, this would be My Expat Taxes. My Expat Taxes, our company is incorporated under Software Spinner GmbH, right? And GmbH is basically a limited liability structure in Austria. And this is equivalent of, say an LLC or something like that. But essentially, it's a business structure with limited liability. And so if something happens, you yourself as an owner of the business, you don't have full liability for that. You're separated. So this is when you have a different entity structure. So this is when it gets a little dicey, but we'll get into that. Now we have another type over there, and this is a little bit more for the US. So a lot of US expats, right? You go abroad, but you might still be holding on to some US structure. So say that you have some type of foreign disregarded entity. So you create an entity abroad, you mark it to the US, you elect it as a foreign disregarded entity. If you have no idea what I mean, just ignore it, right? This is for those that kind of are a little bit more tax savvy and going with the US structures. Another one is you have an LLC in the US, right? So it's a single member LLC. Basically, you just create an LLC, but then everything flows down to you. Maybe you create an S Corp, and you did this back in the US. So an S Corp is really a structure that essentially is kind of like an LLC, but the income doesn't flow directly to you. Now, again, if you have no idea what I mean, this is not really the time for me to describe every single part of these aspects. It's more of, if this sounds familiar to you, these are the different types of companies there are. Now, again, another one, if you're really in the US, you're working for a US company, you have a W-2, you might be a statutory employee. So these are really the different types of self-employed that you can see on a US tax return. It's a lot. So that's kind of what I'm coming down to is you really have to think about what kind of, self-employed person are you? Are you yourself kind of a freelancer and you're really operating under your own name? Your income is flowing to you as a private person? Or do you have limited liability? And basically that you are, doing business through a separate entity, and that entity has, holds the majority of liability, and you yourself as an owner have very limited liability. So you're separate from that. So that's kind of the first question that we always ask. I think 80% of folks abroad that are self-employed, you're freelancers, right? Maybe you have a registered company, but it's not limited liability. You haven't really set up your own structure. And then, there's a small percentage of us that say, nope, we're going to create our own independent company structure. So I hope I didn't confuse you there. But when you go in and you say you're self-employed, this is the first thing you have to think about is, what kind of self-employed person are you? Again, most people being freelancer. So I'll talk a little bit more about that. So when you're a freelancer, when you have a company without limited liability, really it's you doing your business, you're the same as your business, right? Basically your income just flows directly to you as the business owner, right? So if you are consulting and you're getting money for that consulting gig, all that money comes down to you as income, and you just report that on Schedule C on your US tax return. And it's pretty easy, right? Now, the other part of it is if you have, you know, a registered company, then the income might not flow directly to you unless you're a single member LLC and you choose to do that, right? That's the one exception. But if you have a registered corporation, the income normally stays in your corporation. It'll get taxed at the corporate level. And then from there, you may pay yourself a salary, you may pay yourself dividends, some type of compensation that will flow down to you. So those are really the different company types. Again, most expats we see are freelancers, right? And then there's a handful of us out there that really do have registered companies with limited liability that we'll get into. And then a smaller handful of folks that, kind of keep on to these US company structures and will come in and say, I still have a single member LLC, I still have an S Corp, et cetera, et cetera. So those are kind of the main company types. Now what I will get to is when we look at a freelancer. So again, this is the most common self-employment. And when you think about a freelancer, the biggest topic out there is self-employment tax. So as a freelancer, as I mentioned, you are making your own money, right? There's no employee that is paying you a monthly salary, which means that they're also withholding tax and they're withholding, social security or health insurance payments, et cetera, et cetera. You make money, you have to file your tax return, and then you figure out how much tax or, social security taxes you have to pay afterwards. So that is what self-employment tax is. That is a social security and Medicare tax. So as a freelancer, if you are making your own money and there's no one paying you and withholding appropriate taxes, you are responsible for one, your income taxes, and you're also responsible for your social security and Medicare taxes. And you're probably thinking, why? Because I live abroad. Why do I care about US social security or Medicare taxes? Well, you're a US citizen, so you do have to care about that, but you don't necessarily always have to pay it. So it is a hefty tax. It's about 15.3% of your net self-employment profit. So if you have multiple self-employment roles, you have multiple Schedule Cs, you would just kind of combine all of that. And per taxpayer, so if you're filing jointly with your spouse, you're both self-employed, it's per taxpayer. Whatever your net self-employment profit is, about 15.3% of that is going to be self-employment tax. So it is kind of a surprise to a lot of expats that are abroad. Now, you don't always have to pay this. So there is an exemption via a totalization treaty. So there's about 30 countries with a totalization treaty with the US. And this is really important. And I'll have a slide coming up with what countries those are. But essentially, a lot of folks in the EU, there's in the Asia Pacific, South Korea, Japan, etc. So if you're in a country with a totalization treaty, that treaty basically says, hey, you as a self-employed person, if you are registered in your country of residence and you're going into the that social insurance scheme there, you're paying social security taxes there in your local country, you don't need to double pay in the US. Now, of course, the totalization treaties differ between countries, but that's the main thing. And they are also for, people that are employed. It's not just for self-employed, but when we use totalization treaty in a US tax return, it's mainly for self-employed folks. So essentially, if you're living in a country with a totalization treaty, what you can say is, hey, I am registered in my local country as a self-employed person. I'm paying the appropriate self-employment taxes, AKA I'm paying social security taxes, health insurance, et cetera, as a self-employed person. So I don't need to also pay this in the US. And then in order to claim this benefit, you would normally have to have a certificate of coverage. Now, this probably will freak a lot of people out because they go, well, what's this certificate of coverage? And this certificate of coverage is, in practice, it's really hard to get. So essentially, it's just a document that you have from your local country that says, hey, you are actually signed up here and paying into the self-employment taxes and the social security scheme of this local country. However, it's pretty impractical to actually get this certificate of coverage, sometimes known as an A1, from every country. I think the only two countries I've seen play nice is maybe the UK and France. Every other country is like, I don't know what you're talking about, and I'm not giving you this certificate of coverage. So basically, what we always say is if you can't get a certificate of coverage, you should at least maintain records of you declaring your income as self-employed abroad and showing that you're paying social security taxes or equivalent abroad. So this should also solve the same case. But if you look at the rules, normally to claim the totalization treaty, you would have to paper mail your tax return and attach a certificate of coverage. As I mentioned, it's really hard to get that. So what we always say is you can still e-file without it. And what we do is put a treaty disclosure in there. However, you should obviously have all of your records intact in case the IRS asks. They almost never. I see about 1% of time they'll actually ask for a certificate of coverage, but 99% of the time they will not. But essentially, that is how you get out of self-employment taxes. So again, I know a lot of information on the screen. The main thing for you to know is if you're freelancing, right? If you're making money as a self-employed person, you should expect to know a little bit about US self-employment tax. If you're living in a country where there's a totalization treaty, and I'll show those countries, you can get out of this self-employment tax. If you live in a country without a totalization treaty, you're subject to the self-employment tax, and there's really nothing else you can do about it. And that can be a really big surprise for a lot of folks. So say, for example, if you are in Indonesia and you're self-employed, there's no totalization treaty. So you're subject to 15.3% of net self-employment tax, right? And then, it's a lot. However, what I want to say to that, it's not all bad, because if you think about it again, it's a Social Security and Medicare tax. So when you are paying into that, that means that you are paying into the US Social Security scheme. So essentially in 2022, right? So now we're kind of heading out of the 2021 tax year because obviously we're in the calendar year 2022. $6,040 of self-employment net profit would earn you the maximum 4 credits. So now I'm talking about US Social Security benefits. And this might sound kind of wild because you're like, I live abroad, I have nothing to do with the US. If you're self-employed and you pay self-employment tax, no matter where you are, you can still contribute to your US Social Security benefits account. So again, if you're making about $6,000 of net self-employment and you pay self-employment tax on that, right? You're actually going to be able to get the maximum of 4 credits per year. And if you do this for 10 years, you are eligible for Social Security benefits when you come of age. So the actual amount you get obviously depends on your income and how many taxes you paid, but you just need 40 credits to get you to, be eligible to claim Social Security benefits. So this is something I do tell a lot of expats is it's a way to think about retirement. So you obviously have the choice as a self-employed person, especially if you live in a totalization treaty country, to say, hey, I only want to pay into my local country. But you still have the choice that you can say, I also want to pay into the US, and I also actually want to keep contributing to my US Social Security benefits so that I get that later on, assuming that, of course, Social Security benefits still exist by the time we all need it. So that is what self-employment tax is. It's not all bad because it helps you contribute to, another type of retirement income, but it's a huge shock for folks that are not used to it. And especially if you live in a country where you can't get an exemption. And if you do live in a country where you can't get an exemption, it's really important for you to understand, do you want to claim that? Or do you want to subject yourself to US self-employment tax? So that is kind of everything about this very high tax that shocks a lot of expats. Let's get into the different totalization treaty countries. So the countries I list on the screen is basically the countries as of this moment, this can change at any time, that has a totalization treaty with the US. Now, keep in mind that every treaty is slightly different, right? But for the most part, if there's a totalization treaty, it will allow you to opt in into your local country's Social Security scheme. So you will say, hey, I live in the Netherlands and I pay Social Security taxes in the Netherlands, and I don't want to pay that in the US. And so I claim the Totalization Treaty so that I'm exempt from self-employment tax in the US. And that's how this would work for you. Now, if your country is not listed there and you are self-employed, please do expect that you will see 15.3% of self-employment tax on your US tax return if you have self-employment income over $400. It's quite a shock, but like I said, it's not all bad. You then contribute to your US Social Security benefits account. If you live in one of these countries and you say, hey, I actually want to still contribute to my US Social Security benefits account, maybe you worked there a little bit before you moved abroad and you're so close to getting the 40 maximum credit or the 40 credits to get Social Security benefits, you actually can still pay self-employment tax. That is a choice you can essentially make, any year. So something to think about. Now, if you're sitting there and you're going, well, I don't live in a country with, a totalization treaty. I don't care to contribute to my US Social Security benefits account. I don't want to pay 15.3% self-employment tax on top of what I already pay to my local country. I understand and I completely feel you. And again, if you're a freelancer and you file Schedule C, you're subject to self-employment tax. But remember what I said earlier about common law employee? That is kind of the one exception. So if you are in your local country and you are self-employed, but technically the person that you work for is only really one employer and you kind of just act like an employee to them, right? So even if you're self-employed and that's what you call it, but you work for the same company, the company controls what you do, they give you the equipment, and you really have an employee-employer relationship, you would probably fall into common law employee. And if you fall into common law employee, then you can elect to report your income not as self-employment, but as wages. And if you report it as wages, you're not subject to self-employment tax. So that is kind of the one exception and something to think about as you're filing your US tax return. So now for the other folks that, go a little bit further and they decide to create a foreign corporation, right? So this is the 5471. This is a massive form, and I'm sure if you Google any of it, it will just terrify you because the first thing anyone talks about is the penalties. If you don't file this in a timely manner, if you don't file accurately, then there's about $10,000 of penalties. And that's what everyone kind of says up front. Yes, it is an intimidating form. I get that. But again, at the end of the day, a lot of it's just informational reporting. There are moments where you can get taxed. So don't get me wrong, it's not purely informational, but for the majority of folks, it's pretty much informational. There's a small percentage that may see tax come from it, even some double taxation, but I won't get into that because that gets a little bit more complex. But really general guidelines is, first off, every situation is super unique, right? Whether you decide to create a company on your own in your local country, 100% owned by you, or if you don't have a company but your spouse has a foreign company and then you own constructively 50% of that because you're married to your spouse, or if you open up a company with some of your colleagues and you own 10% of that, it's all so unique. So it's hard for me to give you really any specific answer. So if you ask me specific questions, I may turn you down at the end. I always say if you have a foreign corporation, it gets a little dicey. We do have in my Expat taxes the opportunity that, to have just a 15-minute call with a foreign corporation specialist. They will hear every detail about your foreign corporation and tell you, hey, you'll probably have to file this form or you don't have to file this form, et cetera, et cetera. So if that's you and you're really nervous, definitely go to my Expat taxes, create an account, go in the live chat and just say, hey, I want to talk to a foreign corporation specialist. We'll give you a link and you can have a 15-minute call free of charge just to understand what you need to do. Now, with that being said, that disclaimer out of the way, I will jump into it a bit more. You normally have to file this form if you or your spouse and your family. So again, there's this thing called constructive ownership, meaning that, okay, you may not own any shares, but you're married to someone who owns shares of foreign corporations. So technically you own half of what they own, right? Because you're married. Or, if it's a family member, there might also be constructive ownership. So again, if you or your spouse or your family own more than 50%, you're probably filing this form. If you or your spouse and your family together own 10% or more of a foreign corporation and you acquire or you dispose of shares in that year, you probably have to file this form. If you're a director or an officer of a foreign corporation, and if this foreign corporation is owned by other US shareholders, which triggers this kind of foreign corporation filing requirement, and they don't fulfill the requirement, then you are responsible as a US director to file the form yourself. I think the last one's pretty rare. I just put it out there because it can happen. It's pretty rare, but it's really kind of the first two is, you own more than 50%, or you own 10% or more, and then you acquire or you dispose of shares in that year. So these are kind of the main trigger points to file this form. Form 5471 has about 5+ of categories of filers. So it really depends on what's happening in that specific year. Did you put capital into the company? Did you get shares? Did you get rid of shares? Was there a new US shareholder added, et cetera, et cetera. All of these can trigger this form. So again, it gets pretty dicey and gets pretty complicated. And I'm usually one to say things aren't that complicated, but I do admit that this can be a bit more complex. So again, if you have a limited liability company, if you own shares in a limited liability company abroad, this is something that should definitely be on your radar. And if it's not on your radar, if you have no idea what I'm talking about, you've never filed this form, I just ask you, go to My Expat Taxes, create an account, go in our live chat, send us an email, say, hey, I might have a foreign corporation filing requirement. Can I talk to someone? You can have a 15-minute call, just vet through it and see, do you need to file this form or not? Because again, there are penalties involved. Of course, if you didn't know you have to file it and you make up for it, there's always ways to waive those penalties. But if you are aware that you should file and you don't, I would advise you file it just because I have seen the penalties enforced on this form. So I hope I stopped scaring you about this. And we can go and jump back to more of an overview. So I just dove pretty deep into these topics. Let's take a step back. And again, what kind of self-employed person are you, right? So, I guess the popular buzz term for the past few years has been this digital nomad, right? I guess that kind of stopped with the pandemic. But regardless, before the pandemic, this digital nomad, you're out there, you are, freelancing, you're traveling the world, you don't really have a tax home because you're moving country to country, etc., and you're just, living your best life. Well, in this case, you're probably a freelancer, so you're probably, getting income from different companies, doing consulting, small gigs, etc. You're probably a freelancer. You would report that on Schedule C. Because you don't really have a tax home, you probably don't pay foreign income taxes, right? You're not registered anywhere as a self-employed person. You're not registering your income anywhere except for to the US. You'll probably use the foreign earned income exclusion, right? To get rid of, any income tax as much as you can up to that maximum threshold in that year. However, you'll probably be subject to self-employment tax because even if you're a digital nomad and you're in Germany, and then you go to Austria, and then you go to Canada, and all these countries have totalization treaties, if you yourself are not registered as a self-employed person, aka you're not declaring your self-employment income to that country, well, you can't take the benefit of the totalization treaty because the totalization treaty only exists so that you're not double taxed in paying social security taxes to two different countries. But if you don't pay any social security taxes to any country, you better bet that the US will want you to pay into theirs, which is not a bad thing because again, it helps contribute to your US social security benefits. Now, if you're a self-employed person abroad, so you're really, set up where you are locally, you're registered as a self-employed person, you're paying all those self-employment taxes, which, can be a lot. I know that in Austria, it's a lot, right? You're probably still a freelancer, right? Unless you really went out to set up your own kind of limited liability company type, you're probably still a freelancer. So you're still reporting your income on Schedule C. You can use the foreign earned income exclusion. You can use the foreign tax credit because again, you're probably registered in your local country, so you're paying income tax. So either or, right? Foreign earned income exclusion, foreign tax credit, either or works for you in terms of reducing income tax. And if you're in a country with a totalization treaty and you can claim the totalization treaty, then you have no self-employment tax. So now you've already reduced your income tax with one of the main expat tax benefits. So FEIE, FTC, and then you claim a totalization treaty so you don't pay any US self-employment tax. You'll probably owe nothing in that year to the IRS. So that's pretty common. And that's what I see the most. Now, if you're a business owner, really a business owner, you have some type of, separate company entity that has limited liability, you're probably paying yourself a salary, right? Or you're paying yourself a dividend, but you're probably not freelancer, right? You're really giving yourself a salaried income or a dividend as compensation. So it really depends on kind of, if it's salary, you report it as wages. If it's dividend, you report it as dividend. Keeping in mind, dividends can also be qualified dividends. You can be using the foreign earned income exclusion, the foreign tax credit. Really depends on where you are, how much income taxes you're paying. But you should expect to have Form 5471 probably in your tax return. Again, it depends really on your unique situation, how much you own, if you got shares, if you dispose of shares, if things kind of change that trigger some type of, reporting requirement in that year. But you should expect that form for the most part. And depending on if you have a controlled foreign corporation, so say that you are the 100% owner of a foreign corporation, that makes it a controlled foreign corporation because it's 100% owned by the US, aka you, that US citizen. This can get into a little bit of this double taxation world, which is super rare for expats, but does happen in this regard in terms of what people call it as guilty tax. I won't dive into it. It gets really complex. However, this is something to be a little bit more aware of. So again, if you have a foreign corporation, especially if it's a majority owned by US shareholders, aka the most common, you just open it and you own 100% of it, that means it's a controlled foreign corporation. And this can be where guilty tax can set in and, you might have a few unpleasant surprises on your tax return. However, there's normally no self-employment tax, right? Because again, you're probably paying yourself a salary or your dividend and you're not having a Schedule C freelancer income on your tax return. So those are kind of the common self-employment profiles. I'm sure there'll be a lot of questions about all of that. And I hope I gave a good overview and I hope I didn't just confuse you more, but you'll tell me in the questions afterwards. Let's go back, take a deep breath, and just go back to the basics of expat taxes. All right. So with that all being said about self-employment, who even needs to file a US tax return? So basically anyone that's a US citizen or a US green card holder, that's really important because I see people that come in that say, hey, for example, I had a US green card, I let it expire because I moved abroad, I didn't do anything with it. Do I still have to file? If you have a US green card and you did not properly give it back, right? You didn't properly abandon it and you didn't properly file a residency termination statement on your tax return, you still have to file a US tax return if you pass the filing requirements. So the filing requirements are on the screen. However, what's not on the screen is the filing requirement for self-employed individuals. And that is, if regardless of what's on the screen, if you're self-employed, if you are a freelancer, you're going to file Schedule C in your tax return. If you have over $400 in net profit, you have to file a US tax return because of self-employment tax, because the US has to see if they assess self-employment tax on you. So even if you only make, $600 from working remote, and let's say a US company pays you and they pay you on a 1099 NEC, so non-employee compensation, pay you $600, you have to file a US tax return because you have to declare that as self-employment income. And the US will most likely tax you in terms of self-employment tax. You're not going to see income tax, right? Because you're under the standard deduction of $12,550. However, you might see self-employment tax at 15.3%. So again, as self-employed, it's always a little bit trickier. So even if you don't have to file a tax return, you might still want to. I just call it out because obviously I think you've all heard about the stimulus payments, but now I won't keep talking about it. However, if you haven't filed tax returns, if you haven't filed for 2020, 2021, if you have no idea what I'm talking about, if you didn't get your stimulus payments, you should file because you'll be able to get probably some good refunds. So that is $1,800 as a refund on your 2020 return, $1,400 on your 2021 tax return. So if you're eligible, might be a reason to file, even if you say you don't necessarily have to file. And again, age is not a big factor in filing. If you're thinking, when does this end? When do I get old enough that the US won't tax me anymore? Age plays a little bit of a factor in here, where if you're 65 or older, the filing requirements will increase slightly, but not by much. And, even if you're really young, if you're making over the filing requirements, you still have to file a tax return. So age is not a big factor. If you make over these filing thresholds, you have to file a tax return. If you're self-employed, even if you don't make over these filing requirements and you make over $400 as self-employment net profit, you need to file a tax return. One thing on there that's probably shocking if you're not used to it is if you're married filing separately, that filing requirement is $5, right? So most common people that are married filing separately is someone that is married to a non-US citizen spouse, and your non-US citizen spouse says, I definitely don't want to be on your US tax return. Please keep me out of it. And so in that case, if you don't have, a qualifying dependent and you don't pay for more than half of the cost of keeping up your home, then you're going to be filing as married filing separately. So if you make over $5, got to file a tax return. Keeping in mind, filing requirements, again, is on worldwide income. It's not just on US income. It's on worldwide income. So if you have foreign wages, US self-employment income, US investment income, some foreign investment income, you have Social Security benefits, and you have a foreign pension, et cetera, whatever income you have from any source, that is all combined before deductions, taxes, expenses to make your gross income, right? And if you don't believe me, you can look at the back of your US passport and you will be reminded from the IRS that you have to file no matter where you go. So I know, what a nice reminder. All right, if you are freaking out, if you're freaking out and you're thinking, I haven't found my tax return, I'm in a lot of trouble. No, not necessarily. If the IRS has already contacted you and asked you to file your tax returns, yes, this is a time to kind of move and make sure that everything is compliant. If the IRS hasn't contacted you yet, you can be proactive. You can go through the streamlined procedure. You can file 3 back years of taxes. So even if you haven't filed for 10 years, 20 years, etc., you only need to file 3 back years of taxes, right? So that would be 2018 to 2020 for right now. And then 6 back years of foreign bank account reports, so FBARs, and that would be 2014 to 2020. You would file that. That would be the streamlined package. You would basically, fill out all that information. And a little tip too is, if you have been filing tax returns, but you didn't know about this whole foreign corporation filing requirement, and you didn't file form, 5471, and there's penalties on it, and you're freaking out, don't freak out, because you can still go through the streamlined procedure to say, hey, I did file, but I need to amend my tax returns because I forgot some very important expat tax forms. So with that being said, it's 3 back years of taxes, 6 back years of FBARs. And if you file all of this, you would basically paper mail that to the US, because I don't know why, but they need you to sign it and they check it when you paper mail it, and an agent really goes through and looks at it. Don't ask me why you can't e-file it, like, making life easier, but you do have to paper mail it. You would paper mail it and the IRS would go through it, and assuming that everything looks okay, you would basically be cleared, right? You would be compliant, tax compliant, even if you haven't filed for more than 3 years. So keep in mind, a lot of people actually get refunds, especially in light of the stimulus payments. If you have children with US Social Security numbers, this is another instance where you'll most likely see a lot of refunds as well because of the refundable child tax credits. So don't think that this is, just a terrible process. I think 99% of expats that go through the streamlined procedure will at least get $1,800 back as a refund from the 2020 return, right? So it's not all bad. Now, with that being said, the streamlined procedure is pretty costly because obviously there's a lot of years involved. We do have a very nice package where we try to give you, the same kind of yearly fee as we normally charge for any other year, with a little bit more just to make sure everything checks out and a tax professional can review it. And if you go and look anywhere else, it's probably going to be about 2,000 plus, depending on what forms you need as well, can get even more. Regardless, that is streamlining. You still need to also do your current year. So that's 2021. However, you can e-file your current year return, and that will at least get you the third stimulus payment, which is $1,400 a lot quicker. if you haven't been filing your taxes and you didn't get your stimulus payments. So that's the nicer side of filing a US tax return, is you can actually get US tax refunds, even if you have no US source income. Alrighty. So that was if you never filed. Now you're saying I do file, or at least I want to keep up and make sure that I continue to file on time. So what are the filing deadlines? Well, this year it's April 18th, so it's coming up, right? We're in the midst of tax season. I mean, kind of. I always say we're in the midst of tax season for the US season. For us expats, it actually is a little bit later, because April 18th is, yes, the day that you need to pay taxes. So if you think you owe taxes, make sure that you pay by April 18th. Otherwise, there can be some interest or penalties, right? However, if you don't think you pay, if you know that you're not going to pay taxes because you never pay taxes as an expat because of the expat tax benefits, you can wait until June 15th to file. So June 15th is the general deadline for expats to file. However, if you think you owe taxes, make sure you go through on the April 18th deadline, or at least model your tax return on My Expat Taxes. Even before you pay, you can enter your information and you'll see estimated taxes owed, estimated refund. It's a pretty good estimate at that point, and you'll have enough information to make an extension payment, right? So that you don't owe any other interest or penalties after the April 18th deadline. Now, you can always file an extension, and I do recommend extensions, especially for those that are self-employed, because you probably don't have all your documents in order. If you're self-employed in your local country, you're probably waiting for your local tax accountant to, go through all the receipts, go through all the paperwork to get you your tax return for that year. So in that case, please file a filing extension. You can file this with Form 4868. You can print it out, mail it to the IRS. It's probably not going to even be looked at until after October 17th, but who knows? You can go to irs.gov/payments and make a $1 extension payment. That will get you the extension. Or you can go through My Expat Taxes, and right in the navigation bar when you sign in, you will see a section that says, your extension filing. You can click on it and you can file a free extension before you pay, right? Really, no strings attached to file an extension for October 17th. So that is an option there. And what I have also seen for people, especially those with actual foreign corporations, because you really need to wait for all your documentation to be in order, you can write a letter so you basically would file an extension until October 17th. And then before October 17th, you would write a letter to the IRS asking for an extension until December 15th. So those are the kind of extensions you can have. Another reason you might want to extend is, say, for example, and this is part of another webinar, but maybe it's relevant for you, if you have added new members to your family. So if you have children and they don't have a US Social Security number yet, this is also a very good reason to extend, because you need to get their US Social Security number so you can get, the refundable child tax credits for them. And of course, if you owe taxes, if you have to file back taxes, et cetera, do it as soon as possible, because every single day there's more penalties, there's more interest being accrued. So obviously, if it's weighing down on you, something to think about and just get out of the way. If you don't owe taxes, you should still file your back taxes, because obviously I'm sure you're thinking about it. But just keep in mind that, okay, if you're late on taxes, but you don't owe anything, then there is no penalty, because, the penalty is a percentage of your tax owed. And if you owe $0, then a percentage of 0 is 0. However, there will probably be a mark on your IRS record to say that you filed late. So that's just something to keep in mind. So these are the federal tax filing deadlines. If we're talking about states have, their own filing deadlines, their own extension schemes. So it's a lot, but these are the federal ones. So with that being said, I'm going to start closing out so we can get to questions. If you're wondering, okay, I need help to go through this and go through my US tax return, you can always look at My Expat Taxes. We did build this for expats. I built this for myself, especially to make my US tax filing a lot easier. If you are simple, right? If you're self-employed, you're not making that much, you can go through, get a Schedule C, et cetera, et cetera. If you have a foreign corporation, we have options for you as well. You meet with our foreign corporation specialist. We figure out what forms you need, and we help you through the whole process. So there's a package for everyone. And if you are, not sure yet, but you want to stay in touch, we do have a Facebook group that is very active. I think Ellen can attest to that. It's a very active Facebook group at this point, where we try to get to all your questions. So basically what I'm saying is we are here for you, right? Whether you want to go through My Expat Taxes or not to file your taxes, we're also here for you just to try to give you information, give you education about these topics, give you answers if we can give you answers, right? Depends on the questions you give me, but I try to answer as much as I can. And That's it. So I would say, Ellen, come back on in.
I'm coming back. Awesome. Thanks, Natalie. I think that is a ton of information. We do have quite a few questions as well. So we'll start with the ones that were upvoted the highest. The first is from Luke, and he asks, how reliable is it to get the IRS to recognize tax treaties for those living in countries who have those? From my limited research, I feel this may not be exploited enough by tax experts. Form 8833, he
Okay.
believes.
Well, we actually automatically put in Form 8833 when it's appropriate. I think the first thing with tax treaties is, like with everything else with the IRS, it's not always so obvious what you're reading. So not every country, but a lot of countries have a tax treaty with the US. And basically, in that tax treaty, you can read what it says, and it might sound very obvious, right? There's usually something about dividends or something about pensions, et cetera, et cetera. What you need to be careful of is that in every single tax treaty, they have what is called a savings clause. And a savings clause essentially says if you are a US citizen, pretend that this tax treaty never existed, right? So basically, with that one clause, 99% of that tax treaty is not relevant to you if you are a US citizen, because the US preserves the right to tax you. However, there is 1%, right? So there's a couple paragraphs that get exempt, and it's really like a handful of paragraphs that get exempt that say, okay, these are not subject to the savings clause. So that's usually around Social Security payments. If you're in a country that you're lucky to have this kind of clause about pension contributions, that's usually in there as well. Essentially, there's a couple there. If there is a relevant tax treaty and you can use a benefit and it's not subject to the savings clause, if you go through My Expat Taxes, we will automatically put in Form 8833 for you. So again, if you're working with tax experts, it depends, right? If it flags for them, sometimes for a lot of people, it's easier to just put this income and other income and just tax it because they say, hey, you have foreign tax credit, who cares anyways, right? For us, we don't go that way. If there's a tax treaty, we will definitely use that tax treaty. I hope I answered your question, but the main thing is the treaty itself, not 99% of it is not relevant to you because of the savings clause. The 1% that is relevant to you is normally around Social Security payments and or pension contributions if you're in 5 different countries. So it's like the UK, Belgium, Netherlands, Germany, and Canada, about pension contributions and being able to defer them. Basically, if you have that, you go through My Expat Taxes, we will automatically add in any form for you. If you're talking about how reliable it is for the IRS to read Form 8833 and agree with our position, I would say 97% of the time, because we have seen the IRS come back and, question some of the positions. 100% success rate when we actually talk to the agent, right? That we have said, this is what's stated in the treaty. And once they read it, they will accept it. But it is common. Okay, not common. It has happened that we have had IRS agents questioning a treaty position. But again, if you adhere to the savings clause, there's nothing they can do about it because it's literally, that's the law that's written in the treaty. So long answer to your question. Maybe that's not what you were expecting, but treaties are fun.
Perfect. Then Greg asks a follow-up question to the same question. I use Form 8833 to exempt my rental property in Germany. The info on this form, the IRS, but I think I am doing this correctly. Any special comments need to be in block 6?
Okay, when you're talking about rental income, I'm pretty sure that is subject to the savings clause. So maybe send us a message on My Expat Taxes. We're happy to take a look and just, give you a sanity check on it. From my first reaction, I don't know of rental income being exempt because of the savings clause. So just take a peek at that. I can't give you too much more because I don't think you can really use a tax treaty for it. I might be wrong, right? I haven't scored through every single page. So feel free to send us an email. We're always happy to take a look. But yeah, look at the savings clause on that one.
Perfect. Fred asks, would love to hear about, this is the California one, would love to hear about issues regarding California state taxes for sole proprietorships who operate from outside the US. Is there any way to get around paying it?
Yeah. I mean, the thing there is, one, for California, so California is a sticky state, right, when it comes to taxes. If you really break your residency with California, then you're not subject to California state tax. So that's kind of the first thing. I mean, I'm from California. I pretty much broke my ties in terms of I didn't renew my driver's license there and things like that. But I mean, I still go visit California. So, but essentially what you can do is you can always file what I say to break ties a little bit more officially is to, file a California state return for a few years as a non-resident and then just say that all your income is brought. Now, if you're self-employed, California gets very picky about in terms, not just that you're based abroad, but who are your customers? So if your customers are based in California, you might still be stuck with some taxes, right? But if you're really based fully abroad, none of your customers are in California, you're not connected to California, I can't really see why you would be paying any taxes to California. So, again, happy to look a little bit more into your situation. If you're using My Expat Taxes or if you're not, you can always kind of send us a quick email and support and just ask for someone to, look over things a little bit more with you and we can decide what's the best route. But again, if you, in terms of state taxes for anyone, if you're not a resident of that state, if you are not working out of that state, if you don't, self-employed, this is more specific to California, but if you're self-employed and your customers are not in that state, there's not really a reason for you to pay state taxes, right? So the main thing there is to kind of cut ties with the state in terms of, it's hard to cut ties because every state has their own definition of what's a resident, what's not. My most official guidance would be to file state returns for a few years afterwards as a non-resident, just to have it in record that you've been filing as a non-resident and say that all your income is basically abroad. So this will normally kind of help you get out of state taxes. Not sure if I answered that, but, hope I did.
Yeah. California. Jennifer says, I recently made some money off of Upwork. The projects are set in dollars, but when I get paid in British pounds into my UK bank account. I've had to fill out a W-9 form and submit it to Upwork. Do I need to do anything special regarding this sort of income?
So that income is going to go on Schedule C for the most part, right? I would probably just report it in the USD amount because that's the amount that you were paid. Whether or not the amount when it gets converted into pounds, right, is the same amount is a different concern. But basically what you do is if you work on Upwork, you can go look and see how much income you earned in that year, right? From Upwork, they usually have a couple summary statements for you. You would report that then on Schedule C. So in My Expat Taxes, you would just say you're self-employed, report your Upwork income. If you're filing it yourself, you would just have a Schedule C, report the gross income as whatever you make from Upwork. And obviously, if you have any expenses around it, you can report your expenses. And then from there, depends on where you're located. So if you are you're located in the UK, there's a Totalization Treaty. If you're declaring this income to the UK, right, and you're self-employed in the UK, or you're at least paying some type of self-employment tax, or you're at least declaring this income, right, even if you're not subject to self-employment tax there, then you can claim the Totalization Treaty. If you're not telling the UK about this income and you're kind of being like, well, this is my, side hustle from the US, then there's no totalization treaty you can claim. So you should expect that 15.3% self-employment tax on any net profit above $400.
All right. Tom says, I got married to a Spaniard in Spain in 2021. Congrats, Tom. Do I declare as married but filing separately?
Yes, you would. So if you're married, period, right? And especially married to a non-US citizen, you essentially have two choices. You have three choices. You can elect to have your non-US citizen spouse be, a US tax resident and report their worldwide income. I'm pretty sure they're going to say no. A few cases I've seen, they said okay, but most of the time they say no. So if they say no, then you can't do married filing jointly. Okay, so then you only really have two other choices. The other one would be head of household, but you would have to have basically a qualifying dependent, so like a child, and you would have to pay for more than half the cost of keeping that home. If that doesn't apply to you, then the only one you have left is married filing separately. So basically, yes, probably married filing separately. You definitely cannot file as single. If you are married, to a US citizen or to a non-US citizen, you cannot file as single.
All right. Thank you. Linda says hello from Finland. I'm not sure if I am a freelancer or registered company without LL. I had to set up and I think this is a Finnish word, toimnimi here, which is for private traders. So it's separate from me as an individual. I am self-publishing books, so I work for myself, not for others. Only income comes from book sales.
So I'm not 100% sure on that actual structure, as I probably have the same struggle saying it. But if you say you don't have limited liability, but you obviously have some type of structure set up, then you're a registered company without limited liability. It's the same in terms of a freelancer, in terms of US tax reporting, right? So you'd still have a Schedule C. It's just instead of, the name of the business, it wouldn't be your name, but it would probably be the name of whatever your company is registered as. And then maybe you have a different address. But the main thing here is, do you have limited liability or not, right? And if you don't have limited liability with that company structure, then you're still, you just put registered company without limited liability and it's treated the same as a freelancer.
All right. Heidi says, how can we continue to add work credits to our Social Security for benefits? I only have 8 of 40 credits because I moved abroad after my first job in the US, but would like to somehow reach 40 credits.
Yeah, if you are self-employed, it's actually going to be pretty easy, right? Because what you would do is you would just subject yourself to self-employment tax, right? Now, keep in mind, self-employment tax is hefty. It's 15.3%. I'll give you one example. I had one client that was in Singapore. They wanted to add to their Social Security benefits account. So I think they were making about 10,000 gross in self-employment income, and they would basically add, they had a lot of business expenses. So if they actually added in all their business expenses, they would have had a loss in every year. But what they did was they only added in enough business expenses to get them to about 6,000 net profit or whatever was necessary in that year to get the 4 max credits per year. So basically what I'm saying is, if you're self-employed, right? And if you're not self-employed, maybe you should look about, having some type of small self-employment gig on the side. So some freelancing gigs. So whether it be on Upwork or something else. And if you're making about 6,000 in net self-employment income, you will get the maximum 4 credits per year, right? You can already still get credits for 2021 if you were self-employed, but you can get the maximum 4 credits per year. And then you would basically just have to do that until you hit the 40 credits. So I totally get where you're coming from. I was looking at my Social Security benefits account the other day. One, I was shocked at how much I worked when I was younger and was like, oh, I didn't realize as a lifeguard, I was a W-2 worker, right? But, I'm also in the bucket where I'm like, okay, now I need to top off my account because I'm so close and I just, would be ashamed to lose it. But yeah, that's how you do it. Have self-employment income, declare on Schedule C. You don't need to declare too much more than 6,000, right, to get the maximum 4 credits. If you declare more, then you just pay more tax, but that also helps increase the Social Security benefits, don't get me wrong. However, you can only get 4 credits max per year. So obviously you have to do the math to see how many more years you have to do this for.
That's a very good tip. I need to check mine myself.
Check it online. It actually works to check it online as an expat. I think you still need a US mobile number, and I'm pretty sure I used my mom's phone number and then asked her for the code when she woke up.
I think we all know the trick.
Yeah.
Abigail says, is it possible to file back taxes to claim those Social Security credits from previous years?
You can. I think it's a little bit strict. So the IRS honors refunds up to 3 years past. I think with Social Security credits, it's a little bit stricter, where it should still be the 3 years. But I know from that one client, there was like a very strict cutoff date. So I think it's a bit late for 2018, but you can still do it for 2019, 2020, 2021. So you would just amend your prior tax returns to subject yourself to self-employment tax. Again, this gets a little bit out of the expat tax world, right? I know we deal with the self-employment tax, but when it comes to actual credits, you should, every consulate will have some type of access to your federal benefits unit. They're super helpful. Like in your local embassy, they really try to be very helpful about you and your Social Security benefits and how to get that abroad. Right now, I think there's about like 800,000 people that are getting Social Security benefits sent to a foreign country, right? Because they're retired abroad. So they're really helpful there. Like I said, you can check your online account. You can always get on the phone and ask them how far back you can. But generally, yes. I think 2018 is too late. I believe you can still do it for 2019, 2020, and obviously we're in the 2021 tax year now. Okay.
Perfect. Justin says, some of my freelance income are
All right. I just lost Ellen.
on US countries into a USD bank account. Oh no, sorry. Justin says some of my freelance income arrives from non-US countries into a USD bank account located on the Isle of Man. How should I treat this income for US taxes, given that I live in the UK and am employed there as well?
Any freelance income you make, no matter where it comes from, no matter what currency it's paid into, needs to be reported on Schedule C of your US tax return, right? So you would report on, if you're in Expat taxes in the self-employment section, you would report all of your freelancing income. You might have multiple freelancing roles. That's also fine because you can have multiple Schedule Cs, but you would report every single dollar, pound, whatever euro that you get because the US wants to know every penny of it. And you report that. And of course, if you are living in the UK and you declare that income also in the UK, you can claim the Totalization Treaty for all of that income. If you do not declare that income in the UK and you don't pay self-employment taxes in the UK, you cannot claim the Totalization Treaty. So expect 15.3% of self-employment tax.
All right. Evelyn says, if SFOP years cannot be e-filed, what happens with the certificate of coverage requirement?
So again, I think most people do not include a certificate of coverage. I have never seen it really included. I think maybe less than 5 returns because it's so difficult to get this form. And I've had people that have said, okay, I'm gonna go get this form because I'm terrified that the IRS will come after me afterwards. I wish you good luck. It's so difficult because you're dependent on your local country's government to somehow honor some US tax form that they want. And most people, I don't know what you're talking about, right? So maybe they have a different version. What I say is definitely if you think you can get it, right, you can try. I've tried to go down this route to figure out what's the right agency for each country, but it changes and it's difficult. Regardless, you can go try to look for it, right? You can look at, whoever is your tax accountant locally to say if they can help you get a certificate of coverage. That's usually the first step. If you can't do that, then I would say, okay, keep your records on a file of you paying self-employment taxes, which you obviously have a local tax return showing that, so that's fine. Don't include that with your tax return though, right? Because the IRS is not looking for that. They're just looking for your tax return. And if you have a certificate of coverage, you can include it. If you don't have it, for my Expat taxes, what we do is we will include Form 8833 in there to claim the Totalization Treaty. We'll also add a statement claiming the Totalization Treaty. And I have seen maybe 2 cases in the thousands and thousands of tax returns we filed where the IRS has asked for a certificate of coverage. So it can happen, right? It definitely can. But in that case, what those clients did was they just sent over their local tax returns and said, I don't have a certificate of coverage, but here's proof that I paid self-employment tax. And that was the end of the conversation. The IRS didn't ask anymore. So again, if you think you can get a certificate of coverage, you should definitely look into it. UK and France being 2 countries I've seen certificate of coverages come from, right? But if you cannot get it, please don't kill yourself trying to get it, right? Again, just keep records of your local tax returns showing that you did pay self-employment tax, because at the end, that's all the certificate of coverage says. It says that you are paying self-employment taxes.
All right. A second question from Evelyn. She asks, what exactly is defined as net profit? I had negative income on my last German tax declaration.
Net profit is a US net profit, right? So even if you have negative income on a German tax return, it doesn't mean that all of the expenses that you had in Germany count as expenses in the US. So basically you would have to go through the exercise of, seeing what's your income in USD and then seeing what expenses from your German side that you can also expense on the US side, and then seeing after, all your income minus all deductible US expenses, what your net profit is. Obviously, we guide you through this for my Expat taxes. Generally, it can come out the same, but there are situations, especially if you're taking like a lot of depreciation costs or something abroad, that these normally don't translate over to the US too well.
All right. Jennifer asks, is there a situation where we would need to fill out more than one Schedule C?
If you have different self-employment roles. So, I mean, I have seen people that are English teacher and they're also a photographer and they're also trying to think what else is there. It's like a publisher. I've seen people with like 10 Schedule Cs, right? Because the Schedule C should be based on every individual self-employment role. And if you're, what is it, jack of all trades, is that the term? If you're a jack of all trades and you do a bunch of things and you have multiple Schedule Cs. But essentially, if you're an English teacher and then maybe you're also a music teacher, you can probably lump that into a teacher on one Schedule C. But if you're like, okay, English teacher and astronaut, and those are just two completely different jobs you do, that's probably warrants two Schedule Cs.
Fair enough. Okay, and I think this is the last question. I think there was a couple other questions that have been answered throughout. Once I reach 40 credits on Social Security, can I apply for certificate of coverage and opt out of U.S. taxes, but still claim the benefits later when I am of age?
Yeah, so I mean, once you hit the 40 credits, right, you're good, right? You're eligible. Again, I don't know what Social Security will look like at the time when you need it, right? That's the next question, but I don't speculate. I just hope that it's still there, right? Once you hit the 40 credits, you're eligible. So that's nothing to do with your future tax returns or anything like that. And once you hit the 40 credits, I mean, you're welcome to go and claim the Totalization Treaty and not pay any more self-employment tax. So that's all fine. But once you're eligible, and you get the 40 credits, your future tax returns don't impact that. Obviously, they can't impact that in terms of how much you get, because and I'm not a Social Security income expert, but the way it works is basically depends on how much you get, depends on how much income you really have. So first you have to get the minimum credits of 40 credits. That makes you eligible, but the actual monthly amount is dependent on your income. So, and how much self-employment tax you paid, et cetera, et cetera. So, yeah, you just need the 40 credits. At that point, you can decide if you still want to have self-employment tax or not. Alrighty. I think I have lost Ellen. Either that or you guys have all lost me. I'm not sure which one it is. So I don't think there is too many more questions. I saw a couple more that just popped in. I'll answer it. For John, do I have to wait to file in the US until I file the local tax return in Spain? I will be a freelancer with one company or one customer. You don't have to wait for your local tax return, right? Normally, you only have to wait for your local tax return if you want to claim foreign tax credits. But if you know your gross income from your self-employment role, and you don't even have to really know your expenses. If you know your gross income, you can put that into MyExpat taxes. And here's a little tip. If you're claiming the foreign earned income exclusion, which is a very popular one, it kind of doesn't even matter how much expenses you put in for self-employment, because it all ends up netting out itself. It's kind of a weird math calculation underneath. However, what I'm saying is you don't have to wait. You can always just file your US tax return, at least model it in MyExpat taxes. And at that point, if we'll tell you, hey, you owe taxes, you might want to wait for your local tax return to claim foreign tax credits, or you might need more expenses, then you can file an extension and wait, but you don't have to wait. Another question from Julie, and I think this will be, I see two more questions, Julie and from Luke, and that will be the end, and I'll let you all get back to your lovely days. Julie says, I've used TurboTax for years. Can I transfer my info from past years from TurboTax to MyExpat taxes so I can do my taxes myself with MyExpat taxes? Of course, you can use MyExpat taxes. So essentially, you just go into MyExpat taxes. There's no way for you to grab the information from TurboTax and put it into our system, because TurboTax would have to give us that access to grab your data. But I promise you, it's super easy to go through MyExpat taxes, right? It's a lot less of a hair ripping out experience as with TurboTax. At least as an expat, I remember when I did it and they asked me like 5 times if I lived abroad, and I was like, yes, I told you that already. But I promise you, it's very easy to switch over. And then for Luke, for CFCs, and I knew I'd get a question like this. For CFCs, is guilty based on a specific form, or is it an overall calculation made based on 5471 subpart F, which is then used to determine if you owe taxes? If you're tax ready at over 18% in the foreign country, and you'll basically never be taxed under guilty, right? So this is a very specific question, right? It is best that you go and talk to our foreign corporate specialist. I'm not going to answer this now because I don't have 100% clear answer for you. So I'm sorry, Luke, if I disappointed you there. However, if you have a controlled foreign corporation, if you basically if you own shares in a foreign corporation that is majority owned by US shareholders, aka probably you might be subject to GILTI, and it really depends on, your subpart F in like income, et cetera, et cetera. So sorry, I can't answer that question in full, but if you have that question, go through My Expat Taxes, talk to our foreign corporate specialist. If you're already with us, then you can always just send us that question and we'll help decipher it for you. So hope that helped. Otherwise, thank you for joining us. I hope I was able to give you good information, and you know where to find us at myexpattaxes.com, live chat, email, Facebook. We are there for you. We are there for your questions because we know it's complicated, but we try to make it as simple as possible. Have a great day, everyone. Bye.